Hmm. Well, hello everyone. Well, everyone. There's nobody here. We shall see how we go today. See if we get some people on board. Typically trader. Good to see you. There you are. There's someone here. Seems a bit slow today. Don't know if everybody's got a hangover from the elections. We'll see if anybody turns up. We've got another couple of people joining. There we go. Sometimes I wish I had one of those channels where there's just like thousands of people here. It would be so much easier. Yeah, well, before we get started, it's been a tricky day for me. I actually gave you guys the call this morning of the DAX, and I unfortunately missed it completely because I had a plumbing incident today, man. So, I actually had to deal with a plumber because I had a massive leak, and I had to go and sort him out while he fixed my leak and then left somebody else with him while he was doing it. And when I came back, that happened. That's the disadvantage of trading with the 4-hour charts. I was waiting for that to close. And then, of course, I went off to the sort out the plumbing, man. And that happened. That's a bit of a unfortunate situation there, man. But okay, shall we go through the markets and see what we've got here today? How's it, guys? Yeah, Jim, Rob, there we go. Good to see you guys. Good morning. Welcome. Daylight savings time has obviously changed. I think the markets are opening a bit later now, but that's okay. That's cool. We can chat. That's what we're here for. We're not here to do little 5-minute charts and, squiggly lines and stuff. Make people excited and make them think that I'm making loads and loads of money. That's not the case at all. Yeah, so an interesting day. Yeah, big water leak on one of the pipes again. Sure, it's like my 5th one in a couple of years. And it's been a bit of a nightmare getting that sorted out. The water bill's going to be not very gentle. How's it, Elaine? Hey, Kikoro. How's it, Roy? Glad to see we got some regulars here today. There we go. That's what I like to see, man. Yeah, so as I was saying just now, missed the trade because I was dealing with life, because I was dealing with that plumbing issue, and I missed that entire trade. That's sometimes worse than taking a stop loss. I could get in now, but it just feels so late. And it's one of those things. Anyway, Euro Japanese yen, that one, we're in that one. Okay, I'm calling that long because if you look at it, it's in its railway lines. It's trending to the upside. It's on its trend support. So I've taken that trade, particularly on the funded trader account. So that one's open there as well. The funded trader account took a big knock with gold, man. Did you see what happened with gold on the election? Phew. That's when you really want your stop loss. That's when you really need that stop loss, guys. That's when it's so important. I had the stop loss in at 27.20. I felt that it would be an invalidation if it went through that, especially with the head and shoulders developing there. And it just shot through. Poof, there it went. And then it went back, and then it went through again. It's gone all the way down. I still haven't decided whether it's going to be long or short now, because it looks to me like it wants to go back up, go back into this, what you would call a fair value gap, take some money and continue on going down. So this might be quite a lengthy correction. It would look like the elections, it looks like everybody just loves Donald Trump when it comes to the financial markets. I got to say, I remember the last time he was in term, man, you could just buy the S&P. You didn't have to worry. You could just buy the S&P, and it just kept on going up. And when he lost the last election, that's when that damn correction happened. And the markets corrected heavily on that. So, I think the markets do like him. They do like him on the financial side. So, you could almost put a banker on that. But as I look at it, as I've said to you guys before, events like that will give you a bit of a reaction. But in the long run, these markets are going to have to sort themselves out and find their place, because this is an imbalance. This is not right. At the end of the day, yes, he's going to sort out inflation, I suppose, and he's going to do everything that he promised because he did it last time. But by the same token, there's a lot of things in place that just don't make sense for the way the dollar's going and for the way the S&P is going at the moment. So I would say that this has to correct a little bit. So I was looking at the US 500, for example. I wouldn't buy long just yet. I'll be waiting for this just to come back a little bit and tell me, yeah, okay, I've relaxed a little bit now. Like the elastic band has just softened a little bit, and you can buy it off again and take it long. Which is why I was looking at the DAX this morning, thinking that looked like it'll follow the US 500 because most of the time the markets do. And I was waiting for that candle to close, and then off I went to sort life out, and then, yeah, come back and there's this long green candle there. If it was a shorter one, I would have just jumped in, but it just, that feels too late. It just doesn't feel right. Okay, so the Brent, that is corrected a little bit. I was expecting it to continue on long, but it hasn't, so we'll see what happens with that. The Euro US dollar is bouncing off its support, so this might be a good long trade as well, guys. We might be able to get a nice trade in here. It is short though, so you just got to be careful here. Has been bearish. That does look like a reasonable bounce we might get out of this. And there's a gap here as well. So I just got to watch out for that money as well. That could cause it to go the other way. My big problem is this Great British Pound US dollar is working against it. But we'll see how that goes. The South African Rand is strengthening, as I said it would. I expected that. I expected that big time. And luckily I sent some dosh over and around this level, so that I can get a bit of a purchase. I see Coca-Cola's come back a bit, so I want to add to that. Need to add to McDonald's as well for the investment side. So that will be happening when the market opens. We'll see how that goes. That's a definite. But yeah, that's come down to 1740 now. That is really, that's quite a bit of strength. But South Africa is expecting a bit of an upgrade. So I expect the SA40 to also give us a nice long feeling here. Problem is this funded account doesn't have the SA40 on it. It doesn't, does it? It's got the ZAR, got that, but we don't get the SA40. That's quite interesting, actually. Yeah. You guys want one of these accounts, by the way, they are discounted at the moment, and there is a link in the description down there if you really want one. If you need a funded account, that is, of course. Some of you don't. Some of you are really rich. I prefer trading with my own cash, to be honest with you. It's a much better way to go. There was a chap earlier had a question for me regarding how to draw the lines in, how to draw the support and resistance in. So I just want to see when he arrives, and then we'll answer his question for him, and we shall go through it gently. Because there was the last time, I think on Tuesday I mentioned it, there was a chap who said that beginners can't succeed with this system. And I just thought, well, that's a bit strange, because why would a beginner succeed with a really complicated, massive, strange moons lines up with the stars type system and not succeed with a simplest system on Earth? Because as you guys know, we keep it simple, we keep it straightforward, because we don't make money from squiggly lines. This is a probability. And how's it, Jabba? This is a probability trade. So all the trades that we take on these lines are just probability. It's the probability of what happened before will in all likelihood happen again in the future. And that's why, for example, we take a trade on this particular product, because we've seen it bounce off this support a number of times. That's not to say that it won't break through it and go the opposite way and go against us, which is why we have a risk management set up, and that's how we make the dosh. We have the risk management the same on every single trade, so that whatever loses and whatever wins, we make more on the wins and we make less on the losses. But some people don't grasp that. They seem to think that a win rate is really important. And a win rate, yeah, it's nice to have a win rate. It's It's nice to win every trade, but that's not what you're about. At the end of the day, what you need to do is make a profit. A win rate is completely meaningless if you're winning small amounts and you're like losing big amounts. That honestly, truly doesn't happen. I just want to make sure the mic is working. You guys can hear me, obviously. Yeah, because I got to do the talking, man. Otherwise, nobody will do the talking. Okay, so there we go, and that's the question I've been waiting for. Rob, what do you think about trading for very quick scalps daily? I'm not the person who would like to sit for so long in a trade. I rather to lose quickly than hold a trade. So that's the perfect question. And everybody who knows me will know that's the perfect question for me. So I've been sitting watching these guys doing the scalping and the 5-minute charts and the 1-minute charts, and they're all winning, man. They're all making so much money. Not. They are not making that money. There's one or two that will be making that money that have the psychology right to do it. And there's one or two very famous people, I won't name them, that are doing quite well. But let me put something to you right now. Then this is for you, typically trader, because 99% of traders don't have the patience to trade, including me. I've been doing this for 30 years, and the only reason I actually trade, because I could live off my investments. The only reason I literally trade is because I like trading and because you want to do something and because it's cool and it's fun. And yeah, you get hooked on it. It's like a drug. And the only problem that you've got is they put a number of traders in a room together, professional traders, people who know what they're doing, and did an experiment to see how 5-minute trading would do. And guess what? 99% of the traders lost. Now, this is where it comes in. It's not about the lines. It's not about the system. So you can learn from, say, the best trader in the world, the best 5-minute scalper in the world, the best 5-minute trader in the world. And he can tell you, I've worked out this amazing system. If you follow this system, you'll have a 90% win rate. You'll win all your trades and you'll make so much money. The problem being that his system might be good, but the two brains work differently. The psychology works differently. So when you're in the trades, you can't trade like that guy. You never trade the same. You can never trade the same as that person, which is why I keep hammering on the psychology and the risk management behind the trading. Believe me, I've done the scalping and I've tried the scalping. Now, where you're going to go wrong on the scalping, and I figured out why the scalpers actually do lose money. And it's because scalping, you can show a win on just about every trade almost, because you'll be trading, and you'll be making, like now, if this was a scalp, I'll take profit, $20, take profit, run away. I've scalped it, I've won $20, right? But I've risked $976 here. Look, I'm risking it for a profit of $2,000, but okay, you've put a stop loss here, a risk of $900, and okay, now you're in a loss, right? But okay, so you were in a profit. You could have taken that profit, and then you can take a trade again, and then take another profit, right? So you win 9 trades in a row, scalping, $20 each, because that's what scalping's about, in and out, quick, okay? And then on the 10th trade, you start to take a loss. You start to take a big loss because everyone takes losses. Market's 50-50. Nobody wins every trade. And that loss starts to go against you, and you don't get out of the loss, or you let it take out that stop loss. Now you've lost $1,000, $970 on that trade, but you've only made $150 or $180 out of the 9 trades that you won. This is the problem with scalping. It happens every single time. Believe me, I tried it myself, and it even happened to me. So scalping, yeah, they can promote it as much as they want to. There are some guys out there, and you've really got to have the the ability to risk large amounts on small movements. Okay, so you've got to be able to, the market's going to move so much faster. So like $200 a point or something like that. And you've got to be able to take profits over a 10-point move or a 15-point move or something like that. So yeah, to master that sort of trading, I've seen professional traders, people that worked on the floor, actual brokerage traders that struggle to make a living trading, even position trading or swing trading like we are. And it's all to do with the brain. It's all to do with the fear. It's all to do with the receptors. It's all to do with your mind. The systems all work. Every single system that you see on the stock market will work. Some of them are lagging indicators. Some of them are complicated systems. Some of them are easy. And there's a lot of technical jargon out there. There's a lot of people out there that'll give you a whole bunch of technical jargon that goes with the trading system. And they'll push it that it's like the most amazing thing. But at the end of the day, it's all the same. They're all the same. They're all 50-50. Nothing is different. They're all exactly the same. They're all going to give you a 50-50 chance in the market. Whether you've got a fancy system or no system, what you've got to have is the business plan and the risk management, as I always say. You've always got to have that risk management, that keep the risk the same across all the trades if you can, and try and make a bigger profit. The reason I trade slowly is because I've been through this. I've been doing this a long time, and I've been through this, and I've tried trading fast. I really have. And maybe I'm just not good enough, but I don't think anybody is, to be perfectly honest with you, and the statistics do show that. I can tell you now that there was a group called the Turtle Traders who would win 20% of their trades, and they traded so slowly. And if I'm correct, they weren't even allowed to sell the trades that they took when they were in. And their boss was there. He was like, "You're not allowed. You can buy it, but you're not allowed to sell it." 2 of their trades would be successful out of 10, and they were the most profitable company around, simply because they made such huge profit on the winners, and the losses were so small. So it's all about risk management. It's all about sure. So yeah, look, like today, I took 10 trades risking $50 per trade and won 6 and lost 4. I'm on 200 profit right now today. That's work for my psychology. I just can't hold the trade for so long. If you want to try it, and if you're good at it, it's going to work well for you if you're good at it. But you've got to have the risk management, and you've got to make more on your wins than you lose on your losses. So if you're risking $50, you've got to be making more than $50 on that scalp, which is, it's not easy, eh? It's not easy. It's not an easy task. It's all about how your mind approaches it at the end of the day. So yeah, you could make a profit that way. There are guys out there that do it, but very few. Like I say, 99% of people normally blow their accounts when they're trading 5-minute, 1-minute charts, or normally end up in a dire situation. Just be careful. Just be very careful trading in the low ones. But if you know what you're doing and you get it right, I've seen a couple of guys that can get it right. You've got to have a strong mindset for it. Do you ever use stops and control risk yourself instead of letting third parties take some of that money? I've done that a lot in my life, a hell of a lot in my life. Yeah, certainly. But you know what? At the end of the day, I have a risk structure that I follow, and I put the stop loss in. You've got to look at it as put the trade in, build the trade, walk away, forget about it. Because you find if you're trying to follow the trade, if you're trying to watch the trade all day, you're going to do silly things. Get out of the trade too early, move the stop loss around, take profit, whatever. You're going to do something silly. Work on the trade, decide on the trade, take the trade, walk away, leave it, and forget about it. That's normally the best way to do it. I have had many a trade in my life where I don't put the auto stop loss in and I manage it myself. But that one, generally, you've got to watch it, because otherwise it can hurt you. For example, look what happened with gold, right? For example, that was a nasty run, and that could have taken a lot of money. So, you don't want to get yourself caught up in a mess. Imagine if this now falls all the way down. It's disastrous if you don't manage the stop loss correctly. So, where the auto stops to is they force you to take the stop losses that are in the market, and you don't mess around with it. If you are risking, you say, yeah, what I'm doing is risking $50 per trade, and literally a disciplined person to stick to. I just tried so many strategies and anyone was working for me. So if you are risking the same amount per trade, which is correct, it's the correct way to do it, because this can work on any time frame. It's the strategy that works, not the squiggly lines. So if you're risking the same amount per trade, and as long as you're trying to make more than that $50 per trade, let's say you're trying to make $100 per trade or $75 per trade, then it'll work. It'll work. It should, because you should win at least 50-50, and like you say, you won 6 out of 10, which is fantastic. So if you can be disciplined, if you can stick your psychology to it, and you don't let it run past that $50, and you take that loss when the loss comes, you should be able to master it. Most people can't, and if you can, you're right up there. You'll be doing well. It does work if you do it that way. So, but just be very, very, very careful of that. It goes into loss, and then you start playing around with it. Stick those stop losses in solid. Let it take your stop loss. If it takes the $50, so be it. Then you're on the right track. Pleasure. Yeah, totally. That works for me as well. I wonder, the chap who asked me to explain the how we draw the support and resistance in, I'm wondering if he's around or if he's here, because I want to show him how to do it and why we do it. But we'll see now if it comes up on the chat, because I know you guys know how to do it, so I don't want to waste your time too much with that. Although you guys do enjoy seeing it, I suppose. Yeah, so, well, don't forget, the market will lull you into a false sense of security. And also don't forget my other saying, assumption is the mother of all evil. Don't assume anything. That will hurt. Ah, there you are. Yeah, the big smiley face. Oh, welcome. Good to have you here on board. I was actually also going to put it on the members video in the morning, because I see you are a member there, but we'll do it now because you're here. That's perfect. All right, so what I do, and everybody will know this. Okay, love you for that. I needed to hear that. I'm the person who needs to hear I'm on the good path or not from someone experienced. I really appreciate your words. Good. Yeah, no, like I say, just be careful on those lower time frames. That's the only thing. But if you can get it right, stick to that stop loss. That's the main thing. Manage the risk. You'll be okay. But that's where we always go wrong on the lower time frames. We forget to manage the risk, and we're just playing, and it moves so fast, and you got to have automated stop losses, because it can catch you out very, very quickly. Right. So sorry, back to Thomas. I'm just going to show you how and why we put these lines in, and let's do it on the FTSE, because there's quite a lot of lines to draw in here. Let's remove all the drawings on this particular product, and then I'm just going to take that out there so you can see the chart a little bit better, and we can see what we've got here. So the situation we're sitting with is, when you're looking at candles like this, right, what you've got is a whole bunch of green bullish candles, a whole bunch of red bearish candles, and on those candles you've got tails, which indicate the buyers and the sellers coming back into the market. Yeah, there's a lot of sellers coming back into the market, and then there's a tail on that candle there, which is showing you a lot of buyers coming back into the market. So what the tails give you is the highs and lows of the day, and it doesn't help you to run your market off that. So that's one of the reasons that we go to the line chart. And I know you said you understand that, but I'm just pointing that out so that everyone knows that. The main reason I use the day chart, just so that everyone understands, is because the day chart is more reliable than the other time frames when it comes to levels. And all we want off the day chart is the main level and the main structure. So you want to take the chart a little bit back and just look at it and say, what does the structure look like? It looks like this was running in a range, it went bullish, and now it's running in a range again. What does that tell you? It runs in a range, it goes up, runs in a range, goes up. Generally what happens with indexes, they tend to default to the upside. So that could be a giant flag pattern, for example, and it would resolve to the upside, not to say that it can't fall over. But now you've got a general pattern on the daily chart, and you can see what the general pattern looks like. So now in your mind, you know what we're dealing with here. Now we go into the line chart because we work with the closing prices. And your main question was, how do I determine what's the high point and what's the low point? Now, the reason we draw a rectangle and not a straight line, because a lot of traders, what they do, they'll draw a straight line through that support there. But the trouble is, this is a market. We're not trading against lines. We're not drawing brick walls in. What we're looking for is an area where the buyers and sellers have left their orders. There might be stop loss orders, there might be sell orders, there might be buy orders, but there's orders in that area. And the reason we determine that there's orders in that area is because every time the price gets there, it tends to veer away from it or drop off on the resistance side or build up on the support side. That's why we draw those lines in, or those blocks in, because it's a general sort of area where we know there's some money lying around, where there's some action going on. Maybe it's the institutions, maybe it's a lot of traders, who knows? So, and the thing is, these little tops, these little closing prices are not in exactly the same place. So what I do is I take maybe the highest level. It doesn't have to be precise. And this is why I say we're not drawing a line in the sand. We're not drawing a brick wall. What we're drawing is a general area where we know the price likes to go to. It's a magnet. It likes to go into that area, and it likes to come back from that area because there's orders there sending it the other way. So that's how you find the money, with supply and demand as well, and with support and resistance. The reason we draw the trend support and resistance in on lines is because you just want to know what the railway looks like and which way it's going. You don't have to, that also doesn't have to trade exactly on the line, just that general area in that sort of pattern. So we take it from the all-time closing price high over there, and we draw it down to the lowest link over there. And that gives you there's a price there that's hit there. That's probably your lowest one. That one's inside the block. That one's another low one. That one's a bit below. We don't have to go that low though. You just need 2 or 3, maybe 3 rather. And then there's a fourth one right at the top there. And that's enough to give you a resistance level on this particular instrument. Now you want to draw a support in. Don't draw it down here, because when is the price going to get all the way down there? It's far away, man. It's going to take forever. So look for a support level that's pretty close by, so that you know you're in the right ballpark. And if I look at this, there's some closing prices here, but what you're looking for is that it hit the closing price. So that's closing, not the highs, not the resistance, the closing, the support. So it's the price down. For example, on top, it's the price up when it goes up. And here's the price down. You don't want the top price, because that's the price up. You want the price that came back down. So that's this one, right? Now, there's a low. And you'll see that it actually takes that price quite nicely as well. Takes that price quite nicely as well. Takes that price quite nicely as well. actually gives you 3 points, which is more than enough. You could have gone a little bit higher up to there, but what for? There is a general area here where there's money. Now, the other picture you've got to look at, be careful of saying it's got to get into the block. No, it doesn't necessarily have to do that. We know that this is a general area and it's close by to that area, so there's going to be money in that area. And when you take it back to the candles, you can see that it goes into the area, gives you the red candles out, that's short, gives you the green candles out, gives you the longs. It's trading in that range. I'm just using this as an example. You can do it on the other ones as well. It works exactly the same. And if you draw a trend line, you get a similar picture. So now you've got this on your day chart. You can see you in a range. The minute you take it to your lower time frame, whatever that might be, and you know, if you're working on a 5-minute chart like typically trader there, I think the day might be a bit high for you. You might want to take your levels a little bit closer, like 15-minute, 30-minute, hour charts or something like that, for a 5-minute chart, because otherwise the day is just going to be too far out and too big for you. But you can take your direction from the higher time levels. Just by the way, go up to the day, see which way the market's going. It'll help you with your 5-minute trades if that's what you're doing. And there you go. On your 4-hour chart, it's a much clearer picture. You can see where you are. You can see where the red ones are coming out of the resistance, where the green ones are coming out of the support. And then when you're on your 4-hour chart, what you want to be looking for is if there's any supply levels, any demand levels. And this one's already been taken out. That was a supply level, but it's already been kissed. It's already been taken out. So that supply level that was there is now gone, and the price has come back down again. Are there any others? Doesn't look like it right now at the moment. So you're only dealing with support and resistance now on this particular product. Okay, so thank you. Yeah, no, great. I'm glad that explains it better for you. You're trying to move to the 4-hour, taking my trades from the lower time frame. So you've been trading on the lower time frames. I take it you're having difficulty on those lower time frames. Do not feel bad if you are having difficulty on the lower time frames. The lower time frames, as I said to typically trader a little bit earlier, are for a very special kind of person. Because like I've said to you guys over and over again, trading is all about how you approach it in your mind and the psychology and the fear and all that sort of thing. And as I've said to you, professional traders, they proved that 99% would lose trading the 5-minute time frames on exactly the same system. Just by the way, it's not the system. It's the way that your brain works when you're trading. It's just how you see the picture and how you take the trades that makes all the difference when you're trading. That's the issue. It has nothing to do with the system or the way that the charts look or whatever the case. That is a probability. The chart is a probability. Now, if you're trading on a 5-minute time frame, you might be looking at if it goes past the higher high, then I can take a long, or the lower low, I can take a short on opening, or I'm looking for a fair value gap. Or if I'm trading with candles, I'm looking at hammers, I'm looking at dojis and that sort of thing. Just remember, if you're trading with candles, the candle is only valid for the period of the next candle. It's not valid for the whole chart, the whole pattern. So if you see a doji on a 5-minute chart, it's only valid for 5 minutes. That's it. Next candle, something else. So just watch out when you're trading with candles for that. That's why I try to keep it simple. Don't overcomplicate it, guys. Don't get overcomplicated. Yeah, exactly. You know, if it works for your personality, you know, and you've got the right attitude when you say it's not about trying to be rich quick. It's about a world system which created me this way. Consumption is killing people today. It's not about being rich quick. You are perfectly right. That's the point. The point is you want to create a life worth living, and you want to create an enjoyable environment for yourself. Maybe you don't want to work for a normal person, normal job, or whatever the case, and you want to do something on your own. Trading is enjoyable. It's fun to you. If you like this type of thing, then that's your personality and you fit into it. And then the different time frames, like I say, it really depends on the different people. And too many people that, for example, are shaped more for slower trading end up trying to trade 5 minutes because someone told them you can make $1 million from it, and then they make a big mistake. But if you approach it with the correct personality and the correct psychology, then you can make it work for yourself, because then you understand how the markets work. The first thing to understand is that you're dealing with a 50-50 game, that you're dealing with buyers and sellers. No matter what your system, you're dealing with buyers and sellers. And that although you've taken a high probability trade, there's still a probability that it's 50-50. It can go either way. And once you understand that, then your psychology also starts to wake up and understand that, you know, you have to work a risk management and you have to work around the trade. You know, there's some guys out there say risk management is rubbish and all the rest of it, and you don't need it. And, you know, it always ends in tears. It always, always, always ends in tears. So I don't go there. I just don't go there. Rob, is it a good idea to refer to a currency strength meter when entering the trade, managing the trade? Do you know what? I don't bother. I honestly don't bother with things like that. I look at the picture, I trade what I see. Don't worry about all these, I don't know, strength meters and little gadgets and whatnot, and buy now, sell now things and what have you. Just trade what you see, because the charts will give you the probability. It'll tell you where the resistance is. It'll tell you where the support is. It'll tell you where the supply is, and that's all you're looking for. Don't worry about, I mean, the US dollar is immensely, look, there's the Dixie. Okay, let's go to the Dixie. That's the dollar. What do you think? Do you need a meter for this? I don't need a meter for this. I can see that the dollar is immensely going in that direction. So, yeah, no, you don't need a meter for that. The euro is just getting pummeled by the dollar, you know, and if there's a bit of weakness in the euro, even worse. So, you know, currency strength. Look, if you look at, for example, the South African rand now, where I will play into a strength is there's a little bit of news on the side. And you guys know I don't play into the news and I don't follow the news. But if something like this comes up, you got to keep it in mind. And the one thing that I did keep in mind is they're looking to upgrade South Africa back to take it from its total junk status to a bit better than junk, I suppose. And that says that the rand will strengthen one way or another. It has to. So you get a bit of rand strength, and then you add a bit of US dollar correction or US dollar weakness, and you get a strong correction on it. You know, you can look at that. That, you know, that's, if you keep that in your mind, it works. So yeah, you know, you can look at a strength meter and whatnot, but don't play into it. Just look at the chart and take the trade. Seriously, guys, don't overcomplicate your life, because you know what you end up doing. And it's not that the strength meter is rubbish. It's not that a moving average is bad, or that a stochastic indicator is bad, or a relative strength index is not a good thing to have on your chart. No, they are fantastic products. And sometimes I'll actually put an RSI on just to see. Okay. I mean, there's nothing wrong with that. But what you find yourself doing if you've got too many indicators is trading against yourself. Now, as you stand at the moment, you're trading against every other trader out there, and you're taking trades based on your probabilities, saying, I'm going to buy this, and there's a whole bunch of traders saying, I'm going to sell this, and everybody's got their point of view on the same trade. And I can guarantee you, you can state a case for any trade both ways. I guarantee it. Now, you come along and you start putting a whole lot of different indicators in there because someone told you this one works and someone told you that one works, or use this meter, or check this out, or check that out. And what you end up doing is confusing yourself. You end up stopping yourself from trading. You end up not taking trades or getting out of trades too early because the indicators are working against each other. And it is a fact that, unfortunately, that you can state a case both ways for every single trade, for every single product out there. That's the unfortunate thing in the market. And that's why I always tell people that you have to understand that the market's 50-50, and that's why. Because every trader's got his edge, his system, his high probability, and every trader's got his idea of whether it's going to go long or go short. You know, we sit here and we think that we all going to do the same thing, that we all believe that we're going to get the same result. But that's not how it works. It just does not work like that. If there's an institution out there sitting looking at a product saying, we're going to throw millions at this particular, let's say it's a stock, we're going to buy gargantuan amount of this stock today, and you don't know about it, how are you going to trade it? Because they're not going to tell you about it, because that's insider trading. So you're going to find out about it when the squiggly line goes up. That's when you're going to find out about it. So understand that there's a counter proposal for every single trade that you take. And each trader's got his own point of view on which way a trade should go. Now, there are a bunch of like-minded traders, like, say, for example, our community here. We're all trading the same way. Maybe we're all trading with price action. We're all trading with support and resistance. But not everybody trades this way. And we all agree that something's long or something's short. But even inside this community, we will have a discussion sometimes on a product that, whether it's long or short, we might have we might not agree whether something is long or whether something is short on this particular system. So for us to believe that we're always going to be right, that's a natural human thing, to believe that we're always going to be right, or and it's quite a shock when we're wrong. It's quite disastrous to our brainwaves when we figure out, like, we take a trade and it goes against us, and it's not working, it's not going for us. Look, there's red lines. You're like, what the hell's going on here? I took this trade and I expected it would just shoot up to the lights, man. What's going on here? Why isn't it winning? And as I say that, it goes green. But anyway, but as I say, you take it with all the confidence in the world. Look, this is still a really valid trade, obviously. Only when it gets down here is it invalid. But that's why we put invalidation in the first place. So yeah, to stop rambling on about that, don't put too many things into your trading. Try and keep it simple. Keep it as simple as you possibly can. Don't overcomplicate it at all. The Kokoro, research the trade, set it and forget it. Nothing you can do with it while watching it. Go back 4 hours later and move the stop if you're lucky. You'll stop out on the bad trades, win on the rest. And Stephen, hey, I made it. How's it? Good to have you, man. Good to have you. Okay, so yeah, now exactly what Kokoro says is what I've been saying all along. Research the trade, take the trade, and go for it. Now, some of you guys probably get up really early in the morning and research your trades, or do some research, or go through the internet figuring out how to trade, or whatever the case. Some of you don't. Let me be perfectly honest with you guys. I normally don't. I did today because I had a water leak, but yeah, I got up at 4:30, something like that. But I don't normally, because I can check my trades out in a matter of minutes. I can go through the charts and I can say it's going long, short, just with a glance. I don't need to sit and go over it over and over and over and over again. I can literally look at a trade and just, okay, I'll take that trade. Okay, I'll take that trade. And then I know that there's trades that I'm waiting for. For example, I was waiting for this one this morning. I wanted to take a long on the DAX. I did have the concerns of the head and shoulders, and I still do, by the way, have a concern because it hasn't broken the head. But as I say, that one, life stopped me from taking that trade. But I would have taken that trade, to be quite honest with you, had I been coming back to it. But you sit and forget. You take the trade and you walk away. I do not sit and watch charts all day. I don't. I have my phone with me if I'm out. Not always. Sometimes I just leave it on my desk. Leave it, forget about it. But if I have it with me and I'm worried about a trade, I will take it with me and then I can go back and just check what's happening with it. But you don't want to watch it too much, because what you tend to do is you tend to see something going against you and then you jump out of it too early when you should have just left it alone and it would have sorted itself out. See, gold's going back up. I'm just wondering if we're going to go short or go long on gold. It's not giving me a really clear picture at the moment. There is a double bottom there. It does look like a bit of a double bottom there. And I'm just wondering now if we're going to get if it's going to back out of here or if it's going to continue on. This is not a supply area. This is a demand area, so this shouldn't even be there. This was for the downside, but it's broken through it. But there is another one here, which maybe it's taken money from down here and it's going back up. I think what I'm going to do with gold, I'm actually going to be patient and I'm going to wait for it to get up to this little goodie here somewhere, or into this fair value gap. Maybe take it short, because I've got a funny feeling with Donald Trump being in power and everyone being excited, gold might just correct. We might just get a correction on gold. So, yeah, let's just see. I just got a funny feeling we're going to get a correction here. I don't know what you guys think, but gold looks like it wants to correct. It's breaking structure. It's falling down. Things have changed in the US. Hey, let's see. Let's see. It looks like it wants to correct. Might go with that. Yeah, okay. That's the one. Yeah, Steve, you got in too soon yesterday when it hit support. And, you know, I was calling it this morning and I was waiting for it. And disappointingly, you weren't here when I told everyone that, unfortunately, I had a bit of a plumbing problem this morning and I was dealing with a damn plumber when he was fixing my leak. And when I came back, this long green bar developed, and I just felt like it's just too high to get into the trade now. But I wanted to get into the trade down here, and now it's sitting all the way up here. You know, that's what happens when you trade slow and you walk away and you come back, and that happens. But look, I was concerned about the head and shoulders anyway. I did mention it in the trade of the day this morning, and you lose one, you win one. You know, it's one of those things you can't win them all. And but this Euro Japanese yen is actually messing me around. But you know, this US dollar Japanese yen is turning and falling over, and the Euro Japanese yen looks like it wants to go long off the trend support. Now, the reason I'm trading this one, guys, is obviously because it's hit there, it's hit there, it's hit there, it's hitting there again, and it's sitting around here. I'm actually in the trade too early because this blocky hasn't closed, but I'm not too worried about it because it's on a trend support. So if it's on a trend support, I don't worry too much about the big green candle having to, you know, show itself. I just won't trade on a big red candle. But if there is a green candle, I'll take the trade because it is on trend support. And, you know, if that breaks down, well, bad luck. You know, that's kind of where I stand with it. Thomas, I caught that one. Well done. I'm glad you did. I'm sure a few of you did. And you weren't as unlucky as me. And I wasn't, you know, you weren't outside watching the plumber dig around in your taps. Yeah, no, that's one of those things, though. Ah, the water bill. Sure, that's going to be nasty. Okay. The US 500 looks like everyone's really happy with that election result. Don't know if you guys are happy with your election result, but everyone else is by the looks of things. That's great. If I lived in America, I honestly couldn't possibly tell you who I would vote for because I don't live there. And I couldn't possibly, I'm glad I live in Africa. It's like nice and desolate. Okay, I'm just looking at these. Look, this SA40. Man, I wish this was on the funded trader account. I'd actually take it long now. It's such a nice trade. We could take it here and it would take us to a nice place. Why don't they have the SA40 on here? Oh well, okay, that's fine. Like I say, if you guys want this, it's Funded Trader Markets. It is in the, I have got a link in the description if you're interested in that. Oh, this was the trade of the day today, guys. This is what I sent out this morning. Trade of the day. I took the spot gold off, obviously, because that failed dismally. I got taken out on that yesterday. Took my stop loss out beautifully, gently. It like wiped me out, man. Yeah, that was Daniel that picked up the head and shoulders. He saw it there. I also saw it, but I wasn't too worried about it. It's a bit like the DAX, I see the head and shoulders. It hasn't played out, so I'm still happy to take the trades. But when it plays out, it plays out. But my plan with this one was to take the long. And if you guys are long, listen to me carefully. My plan was to take the long, and if it turned against us and went through here, then I would take the short out, swing the trade around, because this is, if it breaks through here, and this is a big head and shoulders, you're going to get a big run to the downside. So if it breaks to the wrong side, simply swing the trade around. Okay. Love the election result. Perfect. I find usually that price correction happens after an event, after the big boys pick up the stop losses or sell-offs. Yes, that's true. Also love the live trading session that you're doing here, Rob. How often do you do these? Well, if it's your first time here, hi, how do you do? I'm Rob. And yeah, the live sessions I do on Tuesdays and Thursdays. And the Tuesdays, look, I live in South Africa, so it's GMT +2. So I do one in the morning on Tuesday, which suits the European market and the African market. So that's like 9:30 in the morning here, or whatever the case. And then on Thursdays, I do this time, the afternoon, so that we can, chat and whatnot. And some of the guys from America can also chat to me and what have you as well, or from that side of the world. I can't do the Asian one because I'm usually in bed at that time. Well, so for example, it's 3:20 here at the moment, and you guys, I think, have moved daylight savings time now, so it's even worse. So I don't think you guys are even open yet. Let me just check, because I wanted to buy some Coca-Cola. It says market closed. Yeah, still closed. So no, as I say, that's Tuesdays and Thursdays. Tuesdays a lot earlier, Thursdays a bit later. And then if you want to watch my other videos, Monday, Wednesday, Friday, there's a video which shows people the market, how to trade, support and resistance, price action, that sort of thing. I do go over the things over and over and over again. So bear with me on that. But that's the important part, is to try and show people how to trade, because I'm not showing you so much as the system, as in the psychology of trading and the strength of trading and the business plan of trading. I show the system so that everybody's got a probability trade, so that you can understand how to take a probability trade. But at the end of the day, it's all about how you approach your trading. That's what makes you profitable. Typically trader, where do you live in Africa, and what was the reason that you moved there? Well, firstly, I had no choice, because my parents brought me here when I was a youngster. And I live in South Africa. I live in Cape Town. I live in Cape Town now. I haven't always lived in Cape Town. But yeah, I've lived here for more than 10 years, and this is my home, and I love it here. One of the best places on earth, man. Yeah, I gotta tell you. I live on the beach. I live by the coast, and wow, absolute pleasure. It's absolute pleasure. It's a dream to live your life that way. I can tell you, I love it to bits. It's brilliant. Yeah. Yep, first off, I live in Massachusetts, USA. Nice to meet you also. I've been watching your YouTube videos for a few weeks now. I trade crypto right now, but we'll get more into the other markets soon. Yeah, you can trade crypto. There's Bitcoin going to the moon again. Unfortunately, I don't invest in Bitcoin, because I'm a firm believer that it doesn't hold any asset value, and I can't find the value in it, to be honest with you. So if it was to go pear-shaped, I'd be like, where is it? It's fresh air. But as a trade, it trades like anything else. So it goes up and down, and it's a probability trade. But you don't need to only trade crypto. If you can trade crypto, you can trade Forex. If you can trade Forex, you can trade indexes. You know what, guys? It's all the same. It's all exactly the same. I don't know the mindset that people give you, or I don't know if it's in the courses or what that you guys do, but I've never done a course in, oh, I did actually. Sorry, 30 years ago, I bought a folder, a file about trading. Sorry, I did do something, but that was the only thing I ever did. But I got to say that, yeah, they kind of teach you that you can only trade Forex, or that you can only trade indexes, or that you can only trade commodities, or you can only trade Bitcoin or crypto. And that's wrong. If you can find a system that works for you, like support and resistance, and gives you a probability trade on a chart, and then you can get your psychology right about how to trade and how to deal with trading and stop loss and risk management and that sort of thing, you can trade absolutely anything. And guess what? As per typically trader, on any time frame, if you can figure it out. So I like to trade the 4-hour time frame simply because I like to take my trades, as Kokoro was saying earlier, I like to take my trades, put them in, and go and do my thing. Come on, I live by the coast, man. I don't want to sit by my desk all day. That's nuts. So whether I go to a shopping mall, whether I go to a restaurant, whether I go to the beach, whatever I do, I don't want to sit around all day. So I take 4-hour trades. Call me lazy, I enjoy trading, but I'm not going to sit here 24/7. Whereas with the 5-minute charts and the slower and the faster time frames, what some people do with that is they'll trade for an hour and then go away as well, and then I'm finished trading, that sort of thing. So that can work for you as well. But if you're going to sit there all day watching charts, that can be quite mind-boggling. That can be quite difficult. So yeah. Typically, trader, I heard Cape Town is a dangerous city, isn't it? No, they lied to you. They completely lied to you. I'm so, that's the fun. It's not the first time. I watched, for example, I had a picture of Mexico being the most dangerous country in the world. I had a picture of China being this disgusting place full of rice paddies. And, when people actually go there for real, they're just normal cities, man, with normal people in them, and everything's normal. And you think to yourself, what on earth? Why do I get this picture in my mind? But to be honest with you, in South Africa, I have lived in other towns up north. And unfortunately, in the last 30 years, those towns have deteriorated to a point where crime is a bit out of control, or has been out of control. And when I was living in one of the cities further north, I actually got robbed like 5 times. And it was actually quite disastrous. I actually had to carry a gun around and all kinds of strange things. It was nuts. So that's what forced me to move into Cape Town. Cape Town is probably one of the safest cities in Africa, to be honest with you. They try and make it look bad. I don't know why they try and make it look bad, but what we have in Cape Town is a lot of crime in the maybe I wouldn't call it the poorer areas, but there's areas that are sort of gangster-like, and you wouldn't really want to go and live there. And it's mainly drugs and people trafficking and all that kind of stuff. There's a lot of gangs, let's put it that way. But they don't bother people in the suburbs. They don't bother people in the town, in the city. They don't bother tourists, that sort of thing. They're just on their own mission. And the reason they make out that the city is like seriously dangerous is because these guys will have a like shootout and they'll kill each other, and then it makes us look like we're living in a disastrous city. But for normal human beings like me, I can walk in the street, my wife can walk in the street, my family can walk in the street, we can do our own thing. It's like living in Europe, no worse than living in Europe. So yeah, no, when it comes to Cape Town, they lie to you about the statistics and how things are going. They also seem to make imbalance the statistics somehow. Because believe me, I've lived in those northern towns, I mean, they don't even have proper roads. They're full of potholes. The traffic lights don't work. You know, there's like just mess everywhere. Everything's dry and dead. The railway stations are closed. It's horrific in some of those northern towns. Let me tell you something out there in the Gauteng areas and the Free State areas and that sort of thing. But in Cape Town, everything works. The roads are fixed. The traffic lights are working. It's properly controlled. The police are working and everything. So it's pretty cool here. So the rest of the country is quite dangerous, but not so bad here. And Durban has also become quite tricky as well, but dangerous. Okay, sure. Niceties aside, awesome, love it, Rob. I'm going to join your YouTube program on the month. Thanks for the tips. Oh, that's perfect. You'll get the video every morning that I go over the markets, and I send it out every morning. And also this trade of the day, I'll just look at where the market's going up and down. Everybody gets that. If you want the trade of the day video, you've got to join the trade of the day. And the reason I do that, guys, is because I do so much for free. Let's be honest. And yeah, just a little bit of something to support the channel that helps. That's good for the channel, man. Then I can buy little microphones like this and whatnot. It's not like it makes you a fortune or anything. The Russell. I'm short the US 2000. Can you say something about it? Aha. Okay. Why would you be short the US 2000 if everything else is going long? You know, I don't really look at it because it's one of the smaller markets in the US, but let's have a look at and just find a broker that is. I don't think it's even on the funded trader account. It's not right. It doesn't look right. That doesn't look right either. I'll just put it in as the US 2000. Just see. Oh, it's a mini run. Are you trading the E mini? Yeah, okay, that looks right. That looks better. Yo, why did you short that? Am I on the right product? Lolo, why are you short on this product? Please explain. Because no, you can't short this. No. I'll speak about it now. My brother-in-law is actually in Mozambique. His wife works for CDC. They were actually in the Ivory Coast for 4 years. They love it out there. Don't think they're moving back to the States. Yeah, no, it's beautiful out here. And I've been in Mozambique a number of times. I stayed at the Polana Hotel. Wow. You wake up and the sun comes off the sea. That's so amazing. Love Mozambique. Absolutely brilliant. Love the cashew nuts. Love the everything. The fish. Lovely place. Portuguese dinners everywhere. It was a Portuguese state many years ago. On funded trader market. Oh, is it on funded trader markets? Okay, I haven't looked, to be honest with you. Is it under US 2000 as well? Let's have a look. US 2000. Oh, look at that. Let me favorite it. And let's go and have a look at it, shall we? Oh, there you go. It's here. So that's perfect. Now we can now I can see if you, okay, you shorted it. Let's just see what you've got here. Okay, that's on the H1. Let's go to the day. Now we're going to talk about your trade. Okay. And I'm going to do it on funded trader markets because it's actually here. That's fantastic. There we go. Right. So line chart. See what we got. Okay, throwing that in. Lolo, why did you take this trade short? Let me see. I'm trying to figure it out. Man. It's not a short, man. Oh. Okay. All right. I can see that you've kind of incorporated what I call the supermarket mentality. And that is you have a channel on the 4-hour. You're looking at this as expensive. And then you've taken a short. Must never look at something as expensive. It's not necessarily so. The problem you've got with this trade is the US 500 and the Tech 100 and the Wall Street are flying. And the Russell's going to go with it because it's in the same place. That's what your worry is. Also, these big green bars are giant, gargantuan amounts of buying into the market. It's broken through a resistance level, a strong resistance level, and it's going up. I would actually have waited for it to come back and take some money and carry on going up. But my worry for you is that it's only going to come to this level here at 2367, 2368. Best case, take the money there and continue on long. What you got to hope for now is that we have a bit of a correction, a strong correction, like a recovery from the election or something to that effect to bring it back down. But to be honest with you, this is not a short trade that I would have taken. It is going short at the moment, and you're actually winning on the trade, hopefully. But it's a tricky short, let's put it that way. It's a very, very tricky short. And I can't really, the channel that you've taken, I can't call it short. No. What I would do now, you're in the trade, okay, so that's fine. You've chosen the trade, and like I said to you, there's a counter argument for every single trade, and the trading's 50-50. At the moment, it's going in your favor, which is great. So what I would say is, when you get a chance, and I don't want to give you advice because you're going to hate me if I'm wrong, but if you get a chance and you're in profit, get out, because it's going to go long. Unless, of course, something changes, unless something goes wrong, and it's the whole market comes down. If the whole market comes down, this will come down. But I'm seeing it come back down to this level here, correct, and then go long. So that's what I'm seeing on this particular chart. Look at the whole chart. Look at this. When you see an all-time high, it doesn't mean that it's expensive. It means that it's doing well. Look at all these levels when it hit resistance. You see this? Resistance hit. This was a strong resistance, and it's broken through. And when these things break out, they can break out heavily, young. This is a lamp pole formation. It has gone quite strong. Very cautious, man. Very cautious. Okay, thanks. Take profit is hit. Take it. If it's hit, take it. Just take it and go. Go for it. That's it. Get out. It's a good scalp. Yeah, you're right. It's a scalping trade. It's very much a scalping trade. This is not a long-term trade. If you take this short, there's nothing long-term about this at all. Well answered, yeah. It's a scalp. If you scalped it, that's great. This is a trade for typically trader who likes to trade on the slower time frames. That would be your kind of trade. Grab it, go. Yeah, that's it. But just remember, guys, you can make a whole bunch of small wins, and if you take one big loss, it can be quite painful. So yeah, there you go. That's the picture. That's what the picture looks like. Okay, so the DAX is absolutely nailing it, eh? Yo, doing well. Good trade. Good trade. Even with the head and shoulders in there. Looks great. So a few of you guys are actually scalping. It's not an easy trade to be a scalper, eh? So 99% of people lose scalping because there's always that one big one. So if you're very disciplined and you keep the stop loss close, you can scalp and you can play on that game. But that's very much, I mean, determining which way the market goes on that is difficult. Gold. Whoa, it's moving, eh? There we go. She's coming back up. And I think this one's coming back up to take the liquidity as well. You see there's liquidity here in this area. Very strong liquidity in this area. I could actually draw a blocky in there for you. Lots of liquidity here. Okay. So on gold, I'm just wondering if it's going to take the liquidity and drop out. Let's just see what happens there. Otherwise, it'll go up to this liquidity at the top here. There's a lot of liquidity here as well. Let's just see what we get from gold here. I think gold wants to change its mind. I don't know. We'll see. Let's just see what happens. You know, if the US 500 is going to settle or if it's going to continue on long. They might want to go for that 6,000. Yeah, amazing story about Cape Town. Why the world lies about the city. I don't know. You know, it's kind of strange. Why they get the picture that Cape Town's so bad. It's internal as well. Internally, they always try and make out that Cape Town's such a terrible place. But it's the safest city to live in South Africa in comparison to all the other cities. Now, I'm just comparing it to the other cities. I've lived in the other cities, so I'm not comparing it by hearsay. I've actually lived in the other cities. I lived in Pretoria, Joburg, Midrand, Durban, name it. Been there, done that. I've been to the other cities. I've been through Harrismith, all of them. Mpumalanga. I know the cities well. I've got friends living in the cities as well. And yeah, I'm telling you guys, Cape Town is the safest city in South Africa. So I don't know. Unless, of course, you live in the ganglands. Of course, I mean, that goes without saying. Anywhere in the world, if you go and live in the dodgiest part of the damn town or province, clearly you're going to have a problem. It doesn't matter where you live, whether you live in America, you live in Mexico, you live in Germany. If you go and live in gangland, you're going to have a problem, man. It's not going to go easy, is it? Or in England or wherever. It's going to go tough, I can tell you. So, yeah, I suppose that's what they do. I've seen it on the news as well. Like I say, I look at on the news and I see countries around the world and they're showing the worst part. And you look at it and think, ooh, imagine living there. Oh, gosh, you know. But in reality, if you go there for real, it's a completely different place. You know, if you just go to the normal town and the normal suburbs and the normal middle class areas, everything's fine. And I'm pretty sure that all of you guys are middle class and up because you're trading, for heaven's sakes. You can't be poor people living in gangster land. So, yeah, just saying. Yeah. It'll, you know, you said here, looking at the trade on gold correction to the upside for correction of 75% of the drop, at least 50%. You know, generally, if you get a 50%, you're probably looking pretty good. And if you look at that, that's in that sort of fair value area where there's some money here. And I'm thinking it's coming in here. It's a bit of a liquidity thing. It's coming in to take the liquidity and probably continue on short. It's just a feeling. I'm wondering if I should look for a red candle coming out of here and maybe get a short on it. But I'll give it some time and we'll just see what happens. See what it gives us. Yes, this is a 4-hour chart. Are you looking at the 4-hour chart right now? Yes. This is a 4-hour chart. There's the 4-hour up there. It's a 4-hour chart we're looking at. Even on this side as well, it's a 4-hour chart. They're all 4-hour charts. Okay. I stick to the 4-hour chart. I take my levels from the day chart. I run on the 4-hour chart. Sometimes I'll go lower time frames just to pick up a sniper entry. But yeah, maybe down to the 15-minute, 30-minute, 1 hour just to see if there's a sniper entry. If I'm looking for an entry point, but I don't need to. Not important. if you're trading on the lower time frames though, like 5-minute and 15-minute, then don't use the day as your levels, because they're going to be too big for you. Rather just go 1 or 2 time frames up, get your levels there. I take the levels from the day because they're more reliable. They just give me a reliability. That's all. So do you use the Dixie as a measure whether markets like gold, US indices will go in the opposite direction, especially strong Dixie drop rise? What I use the Dixie for is to determine where the dollar is going, and it also tells me on Forex what's happening with the other currencies. For example, Euro, US dollar, Great British Pound, US dollar, Japanese yen. Just gives me an indication on that as well, because look how correlated they are. Very correlated if you look at it at the end of the day. And then it can also tell you very much on gold what's going where and what's happening. For example, we got those lines yesterday. Gold, we got that fall yesterday. You know, it's kind of inverse. So you can get a picture from that. Be religious about it? No. You know, I'm not going to say, well, because that happened, that's definitely going to happen. But it generally does. You can sort of get a picture of what's going on. So you're quite right. Yes, the Dixie is very much a product where you can sort of picture with, you know, you can see what's going to happen with other products because of it. What's going on with the dollar will affect what's going on with everything else. Even the US 500, for example, it will affect it. Will it affect the DAX? Probably not that much. So you can follow it for gold. It doesn't affect the Brent. What affects the Brent is the amount of barrels of oil that are in supply, amount of barrels of oil that are available, how many are on hold, and that sort of thing, and what's happening in the Middle East. So gold, you can sort of play against the Dixie, because that's why if you look at, like, for example, on this funded trader markets, it's gold against US dollar. See, that's how it's depicted, gold against US dollar. That's generally how it's pegged. So, you know, it just shows it on this chart as gold. But on this particular chart, it literally shows you that it's pegged against the US dollar. So that's obviously the pricing on the US dollar is going to affect gold one way or another. And if you get a bit of a correction on the Dixie, then you're going to get a movement in the gold. But that said, look at this. Okay. Like I said to you just now on the gold, I was looking at the gold chart and saying it's coming in here, taking some liquidity to carry on down. And people might say, maybe not, maybe it'll go a bit further. Yeah, but look at this, guys. Exactly what we're talking about now. This is broken through resistance. It's coming back, taking some liquidity as well. It'll probably continue on to the upside. The dollar might just carry on. So people are very excited about Mr. Trump being in charge. So don't overlook that. I remember the last time he was in charge, as I said earlier in the program, that you could just buy the S&P 500, the US 500, and Tech 100 and Wall Street. You could just buy. You didn't want to go short, man. You just kept on buying. It just kept on going up when he was in charge last time. It was when he left office that actually things started to turn the other way. I was actually surprised. But yeah, things actually started to go south. So it seems that America is very confident in his ability with the financial side. And it does affect the markets. It certainly does. So I'm thinking gold is maybe going to make a U-turn somewhere around here. That's a probability. It's not for sure. So yes, do we use the Dixie? Totally. You got to look at things like that. It gives you a picture. It gives you a picture of what's going on in the general market. You got to look at one against the other. Gives you an idea of what's going on. So done for the day. Took my $200 on my four accounts, $800 per day. I'm so happy. Literally finding my edge. My edge is risk management based on support and resistance. There you go. I'm always happy to see a success. That's fantastic to see a success like that. Absolutely amazing. Keep it going. And if it's going like that, do not change anything. Just keep on going like that. Just keep it going. Keep it going. look, the main reason for you to be in a community like this, or to be in any community, is it's a lonely game. Trading's a lonely game, and it's nice to have people around. Hey Rob, good to see you. Greetings from Zambia. I haven't traded this week because of the elections, but I'm hitting it next week. Yeah, it's good. I also backed off this week. Mike, I particularly, sat back yesterday during the elections and said, wow, let's see what happens, man. Let's see what happens, because I don't know who's going to win and what's going to happen. And even if anybody won, I wouldn't have known whether it would go up or down. I mean, I had no idea. I just wanted to see how it would affect the markets, and it did. It did affect the markets. I was unfortunately sitting in this gold trade, which I got stopped out on because I was long, but that happens. Because I only trade what I see, not so much the news. But yeah, I did exactly the same, Mike. I sat out of the market and I just sat back and waited to see what would happen. And then this morning I wanted to take the DAX, and then I had the problem, and then I took the Euro, Japanese yen, and that's it. But I haven't taken a lot of trades now because I'm sort of looking for trades in the market now since the elections are over. But I'm also looking at there's possible, like US 500 and all those will start to settle after the rush of blood and the adrenaline rush and the excitement. These things might start to settle and just sort of come back around. So let's just see. That's why I think gold is sort of pushing its way back up here. It's going to find some money. Dixie's sort of pushing itself down a bit. It's going to find some money. That's going to shoot up. That's going to shoot down. They carry on that way. Thanks for the Dixie, Rob. Good lesson. Yeah. No. Hey, Daniel. Good to see you, man. Yeah, I was talking about you earlier, but I can't remember why. Yeah. Yes, XAU is what I trade too. Too jumpy. Yeah, no, totally. Look, you got to look at it as most of the things will work around the US dollar. The US dollar kind of runs the world. Sad to say it, but that's how it is, man. And you got to work things around that as well. So keep an eye on it. That's why the Dixie's there. You got to keep an eye on it and just see which way it's going and what it's doing. And then look at the inverse of the euro. It's perfect. It's absolutely perfect at the end of the day. SA40, where we're going. Yeah, it's the one we don't have. So you're out of the Russell trade now, Lolo. I hope so. You're probably out of that. And you check the replay. Yeah, me too. Yeah. So Daniel's one of our top contributors here, guys. He's always around, always in, always on the show, always about. So, yeah, that's why I know Daniel so well. Always on the show. Love it to bits, man. Love it to bits. Okay, so where are we now? Why did I miss the DAX trade? So upset about that, to be honest with you. But okay. Dow Jones, there's a gap. You know what we say about gaps, right? They come back to get filled up at some stage. So there's a good chance that one's going to get filled up at some stage. Wonder when. Interesting. Thanks, Daniel. Appreciate that. Yeah, that gap is, wow, that's quite a gap. You see what I said earlier about these markets are going to settle back into place. And it's like Mike said, I'm waiting till next week because we just wanted to wait for the elections to be over. And you have a good point, man. Even today, I'm looking at getting back into trades, but, these things are a little bit, this has to settle and it's going to come and close this gap. How's my euro, Japanese yen? Yeah, I'm losing there. Okay, but that's fine. It's also, that one's not doing anything because it's euro, Japanese yen. The reason I took that is because it's got very little to do with the US dollar. That, doesn't need to settle or anything like that. And but the gold, I'm just, like I say, I'm waiting for that to give me a signal. I think we're going to go short on the gold. What will happen between now and January, Daniel, is there's going to be quite a lot of positive sentiment. We normally have a bit of negativity September, October, and November, it starts to become positive on historically, and December is historically quite positive. It's the Christmas rally, as we call it. We have the Christmas rally, so you can expect a lot of positivity. And now with Mr. Trump being in charge in the US, as I said the last time he was in charge, the markets did really well. And I presume there'll be a lot of assumption that the markets are going to do well again, so people will be buying. So I can actually assume that in all probability, these markets are going to be quite strong. I don't think we're going to get any crashes or anything like that, unless, of course, we get a geopolitical event of some horrific nature. I don't see much negativity for these markets. A bit of a correction, maybe a healthy correction somewhere. That would be these markets sort of settling back into place and then heading back up. And I can see the US 500, the S&P 500 hitting 6,000 quite easily, maybe even more. So it's a big move. It really is. Olivi, hi Rob, first time in any live trading session. Wow, that's amazing. I'm actually quite honored, to be honest with you. I'm very excited. I'm an investor learning trading. Right. So, bit of a sort of advice from me, and I don't normally give advice, but my point is keep investing as your number one thing. Keep that as your number one thing. Don't ever make that secondary. And then keep trading as your secondary thing, your fun thing, the thing to do, the thing to enjoy. That's what I do. I keep investing as my number one thing. I'm literally sitting here talking to you, waiting to buy some Coca-Cola shares and some McDonald's shares when the market opens. And by the way, is the market open yet? No, it still says closed. Okay. Maybe I just need to, let me have a look there. It's on a completely different screen, guys, so sorry about that. But I'll check it just now, not to worry. I think it only opens in half an hour. Yeah, okay. So I'll wait for that, and then we'll see how that goes. But yeah, no, totally. I'm glad to have you on board. Hope you subscribed and stay with us, because as long as you are quite happy to hear the truth and don't want to hear that you're going to make $1 million today, and that trading is quite complicated, and you've got to have a good mindset to trade, and it's not about the squiggly lines that make you profitable and that sort of thing. Then you're in the right place. You're in the right place. Then you're with me, and I prefer to tell people how it is, not what what a lot of people tell you. You can just a lot of people tell you this is a casino or something, and you're just going to make money and it's going to come out of your ears. Sorry to tell you, you want a better life, good, but you want to make millions, off to the casino. Yeah, I got in a trade when it first got out. OBS reconnection successful. Goodness me. I get messages that say I'm disconnecting. I'm like, what? You can't do that. Okay, luckily it's still there. Gee whiz. Okay, so I have subscribed. Great videos. I'm very scared of trading right now. I lost some money in SMCA recently. Like sell it. Okay, look, trading's a risky game, and as I always tell everyone, and everyone will know I tell them this, trading's a 50-50 game, guys. And it's not because of the squiggly lines. You've got all probability of taking a high probability trade, and even then it's a 50-50 game, because you're trading against buyers and sellers, and everybody wants to win in the markets. That's the thing. So, if you follow my policy of the business plan and just managing your risk, whatever time frame you're on or whatever investing you're doing, Just manage your risk properly and risk the same amount on every trade, and don't worry about it too much. You'll be profitable. Just don't expect a win rate to make you rich. A win rate's not going to do anything for you. What's going to make you profitable is the way you approach the market, the business plan that you approach the market with. In other words, keep the risk the same on every trade. Try and win more trades than you lose. And or try and win more on the trades that you win than the trades that you lose. That's the big thing here. I saw once a picture of trading learning progress. It was the one guy played at piano and adult was above him saying, "Stop, you're not good at it." And then the guy answered, "You stop, I'll never be good at it." And that is so true, you know. If you stop, you'll never be good at it. And that is 100% true. You know, at the end of the day, they say practice doesn't make perfect, but it actually does. It actually does. I mean, I've been doing this a long time, and I can tell you now, I don't know many guys that have got into the stock market in trading and that have been successful in the first few months. It normally takes a while for you to get the feel, to get the picture. And some guys will take years to figure out that it's actually all in the mind, and it's all in the fear, and it's all in the psychology before they figure out that that's what actually makes them a successful trader, not the lines, not the squiggly lines. You know, so many guys go into trading and they only see the charts and they only see the lines and the candles, and you start believing that that's what you're trading against, but you're not. There's no algorithm that you're trading against. You're trading against people. You're trading against money in the markets, and that money comes from other traders, and it comes from institutions, which are other traders, and they're all buyers and sellers, and they all believe that they've got a better system than anybody else, that they've got the high probability trade. And when you understand that, then you start looking at the lines differently. You start seeing them differently, because then you understand that you're looking for liquidity. You're looking for money in the markets. You're not just looking at lines. Makes a difference, eh? But you become good at it. Yeah, that is true. You know, I'm a big fan of Tom. I think he's a great guy, and he's one of the few on the earth that can trade a 5-minute chart. He knows his stuff. He's done extremely well in his career. Tom says people don't fail because they don't know enough about technical analysis. They fail because they don't understand what the markets are doing in their minds. And he's perfectly correct. Perfectly correct. That's been my problem for 2 years. Get mad at the market and move, stop, or take it off completely, and it turns into a huge loss. Yep. I've been saying it over and over again. Do not move your stop loss. Do not move your stop loss. Just take the stop. Take the stop and walk away. You know, the great thing about, for example, you guys talked about Tom now, is don't try and emulate him, because you can't. He's got a special kind of brain, and he switches off psychologically. He doesn't have fear. So he can trade high stakes and it doesn't hurt him, doesn't bother him. It's really something very, very complicated to get around, because it's not about a system. Yes, everyone's got an edge, everyone's got a high probability trade, but it's about how you approach it. That's what makes the difference. I mean, if you take a loss and you don't even feel it, it's a special kind of feeling, right? So yeah. Okay. I'm glad you're there to support my way of approaching the markets. Keep up a good job, Rob. I certainly will. That's why I'm here. You guys actually keep me here. Totally. If it wasn't for you guys being here, I wouldn't be here for you. So, as I've said over and over again, I actually started this channel with a thought of just getting a couple of videos out there to tell everyone that, you know, you're not going to make $1 million in a day, and this is the reality of the market. And it turned into this lovely community, and it's growing and it's growing and it's getting bigger. and I'm really happy. I enjoy it. So yeah, that happens, you know, because I've kept myself busy with a couple of other small YouTube channels and whatnot, on other subjects and what have you, just for fun, because trading's a lonely game and you get bored, and especially when you're trading like I do, sometimes you've got nothing to do, so you do things. So I did this. And here we are, and I never expected that one day I would be live talking to you guys. That I never expected at all. I never thought I'd come to this sort of scenario. Okay. I asked myself a question: what 99% are doing wrongly and why I'm in it? The main question was, why do so many traders lose? They chased wins instead of managing risk, also studying technicals, etc. The reason that 99% of people lose on those lower time frames and 80% of people lose on the higher time frames is simply because they think that a win rate is going to make them successful. They think because a squiggly line is going in a certain direction that that's going to make them money. And they don't understand that the market's 50-50. They don't understand that they need to have a risk management policy, and they don't understand that you need that coin flip mentality of, if I lose 5, I lose 1. If I win 5, I win 2, and I make 2 for every 1 that I lose. That is the mentality that you need to gain. And that doesn't matter what time frame you're on or what kind of trading you're doing, what kind of system you've got. It doesn't matter. The system's irrelevant. You can have no system. You can literally look at a chart and say, I'm going long. And if it goes short, have a risk management. If it goes long, take the profit. But just make sure you can make more profit than you can lose. You don't need a system. You don't need a system at all. But what the system gives you is a high probability trade. It gives you the advantage of, I'm going to take this trade because I think it's going to win. And even, as you guys mentioned, Tom does the same thing on his 5-minute trading. He's got his own systems which tell him that, okay, if I trade now, it's probably going to go in my favor. But even he understands that the market is 50-50. And he's a successful guy. Okay. Thanks. I learned so much today just looking at your screen. I'm glad you learned something from it. And that is really, really important. And the important thing is that you guys gain something from this at the end of the day, and that it helps. That, you know, and as I say, my channel is not like other channels where, you know, you get on there in the live show and there's 5-minute charts and I'm showing you the candles going up and down and what have you, and it's really exciting. I'm not that exciting, guys. I'm kind of a slow trader, and we chat about trading 4-hour charts. So yeah, they all work on the 50-50 principle because it's true. Yeah, no, totally. That's it. And that's why I say, if you understand, you know, there's so many different systems out there. And as I've said to you over and over again, do you know what? They all work. Every single one of them works. The reason for any trade can be discussed. You know, you have 2 traders sitting in the same room looking at the same trade, and one will say it's short and the other one will say it's long. Simply because that's what they see. And that is when you wake up and you realize, well, hang on a minute, you know, maybe the market's not all one-sided. You know, we might as a community have agreement on the way we see a trade because we're trading a similar way. But even in, like I say, even in this community, we might still disagree on a specific trade at any one time. So, and it also might be how you might be looking at it from a different perspective as well. For example, I might be looking at a trade and say, if I take this trade, it might make me money over the next day or so. And you might be looking at it and saying, if I take this trade, I might be able to make $50 on it in the next 5 minutes. 2 totally different perspectives of looking at a trade. And you're going to get 2 totally different answers when it comes to you going long or short. So, you know, it's so important to understand that. And you know, there's different times, there's different perspectives, there's different systems. And all I say is keep it simple. Don't overcomplicate it. Don't go nuts with the complications on these trades. It's not going to go well at the end of the day. Oh, there's old gold giving us a little bit of a red dot there, man. Hey, what's this red dot at the top here? What's going on? We're getting a bit of a turnaround here. Oh, no, slow and true gets you through. That's it, Danny. With time learning trading, because I became a way better person, to be honest. That also, the interesting thing, you learn so much about losing. It's so important factor in life when we run away from it. Yes, this is true. You know, if you learn to lose and if you learn to take your knocks, it does make you a better person. NQ can't be stopped. When you say NQ can't be stopped, I got to tell you guys that the Dow Jones can't be stopped. The US 500 can't be stopped. Look at this. Come on. Look at this. This is the S&P 500, the US 500, whatever you want to call it. That's moving, guys. It's on the move. The DAX is now on the move. Dow Jones. Look at the Dow Jones, man. Look at the Dow Jones. It's on the move. Okay. Tesla up 14.75%. Why is Tesla up 14.75%? Because Elon Musk is big China's with Donald Trump, so he's not going to jail. NASDAQ, man, look at the NASDAQ, the NQ. There you go. It's running, man. There you go. They're all running. So that's where the markets are at the moment, and that's how they're going to go. But there's going to be an end to this. There's got to be a bit of a correction. It's going to slow down a bit. It's going to settle soon. It will settle. Oh, it looks like I'm in a losing trade on the Euro Japanese yen at the moment. Oh, that's life. Damn. Okay, that's how it goes. But we'll leave it. We'll see what happens. In fact, I'll leave that one overnight and see what it does. See if it goes in our favor or if it... I hope it doesn't break through and now and go the other way, because that'll be pretty irritating. But why is it doing that? Doesn't seem to have any good reason for it. Euro US dollar turning around. Okay. Let's see what happens with gold. Okay. The Donald is back. Getting out on gold as the US market opens. Righto. There you go. Well, it's taking some liquidity here, so it might actually go short. Let's just see what happens. Let's see what happens with that candle, and we shall take it from there. Let me see if I can get my trade in this after, or my investment in this after. I want to buy some more Coke and some more McDonald's now. And okay, guys, I'm going to be off now. Quite late in the day. The markets are going to open for you guys, and you're going to enjoy yourselves. I'm sure NQ is my day. I literally today killed it with my trades. Morning took 200 on the main account. 1 hour ago, 3 trades, and did the same with 4 funded X. Happy about that, literally. Okay. So you're getting affiliated with the NQ, and that's quite good. It's a nice product to trade. Just remember that the NQ's been very positive lately. So has the US 500, so has the Dow Jones. Just keep in mind when that changes, all right? Just keep in mind when it changes direction, make sure you know that it's changed direction. So, guys, I want to thank you guys for being here today. I'm going to head on my way. I'm going to be off. You guys must enjoy your trading day if you're in America, and enjoy the rest of your trading day if you're anywhere else in the world. Have a good one. And I'm going to now, as I say, hit the road and be on my way. Got to go and feed the dogs as well. It's late in the day here. Probably early for you guys. Enjoy yourselves. Have a good one. I see the markets are moving around a bit just before open. And there might be a little bit of here and there. We'll see what happens. It looks very positive, but it is just before the open. So just keep an eye on it. See what it does. Maybe we'll get a bit of a correction down and then up again. So enjoy. Thanks, guys. And thanks for the love from India as well. Man, that's great. Fantastic. See you guys soon. Have a good one. Cheers. Enjoy. And don't forget to come back for tomorrow's video as well, eh? Ciao.